Oil prices are trading around $100 a barrel. So Stephanie, oil really got that pop after the announcement that a pipeline is going to reverse directions and bring oil out of Cushing to the Gulf Coast. How significant is that long term?
Oh, I think long term, I do not think it's significant. I think short term, it's just a technical situation. In fact, I think what's happening right now is you have a lot of shorts that are covering. A lot of people were short energy, over the last couple of weeks, because I think people didn't realize that, didn't believe that there was real underlying demand. So this week, Merrill Lynch had a conference in Miami, and several energy companies presented, and they were quite bullish about the environment, supply, demand, but particularly on demand, that is a little bit better than expected. So I think that you have some, the shorts continue to cover. I think fundamentally you should be buying these stocks, particularly since some of them are well below their highs.
Before we get to the stocks real quick, where do you think that oil caps out here, and does it go lower? Are we going to stay around $100?
Well, I think we're probably going to stay in a range, from 85 to 100. So maybe technically you could go higher, but I think fundamentally you're kind of in that 85 to $100 range.
All right, then in terms of the stocks, you mentioned it was positive for the stocks. Right. Are you looking at big oil?
So within oil, we've always kind of had a diversified basket, right? You want to own kind of like the large integrated, but you also want to go throughout the entire spectrum of the food chain. You want to have E&P service, and you want to have deep water drillers as well. And I would also argue E&C companies. So we have a little bit of everything. We actually do not have, we sold out of Chevron for a nice gain, but we are very bullish on ENSCO, the deep water market. The deep water market is very tight, and ENSCO is the number 1 player. E&P, love Apache. I think it's still unloved, and it's down $30 from its high still, right? So, and they had probably the best quarter out of anybody in 3Q. So I like those. And then I like Fluor a lot. Fluor is a company that gets no respect. They really posted an outstanding quarter, and I look at the backlog. They're at record backlogs, and it's like it trumps the industry in terms of the size. And so they have massive visibility. And again, if oil stays, in that 85 to 100 range, projects are not going to be delayed.
What about refiners? They got really hit on the pipeline news because on the fear that the spread between Brent and WTI is going to shrink, their profits will also shrink. Does this make a good buying opportunity for refiners?
I don't think so. I think refiners are trading vehicles only. So if you want to trade them, by all means, Valero down 7% in a day. That's kind of interesting. But in terms of long-term fundamentals, it's impossible to make money in refining. Not impossible, but it's very hard. And that's why a lot of these companies are the large cap integrated. That's why a lot of them are shedding these assets, and why they're splitting up into two, because there's no growth there. So you can trade them all you like. I'd rather own some of these others.
All right, thanks, Stephanie. I appreciate it. So that's your energy basket, but avoid those refiners for a long-term investment.